The Australian Financial Review.
There's been a lot of talk about superannuation lately. What it should be used for, how much you need to comfortably retire, and how it should be taxed.
You know, this is a really unique system in the world. There's 3.3 trillion in assets. Put that in context, it's pretty much twice the size of the Australian economy.
That's my colleague, wealth editor Alex Vikovic, who's been following this closely. Up until Monday, the government was accepting submissions about its plan to wind back some generous super tax breaks.
Today I'm announcing that earnings on super balances above $3 million will have a concessional rate of 30% rather than 15%.
Prime Minister Anthony Albanese said this would only affect 0.5% of the population. He also revealed that 32 people have more than $100 million in their self-managed super accounts. A majority of Australians agree the government should crack down on the use of super for tax minimisation and estate planning. But while the policy has broad support, the loudest protests have come not from the wealthy account holders directly affected by this new change.
It's complete crap that this only hits wealthy people. Basically, your superannuation is going to double. They're making out like I must have put extra money in, I must have circumvented the system or something.
They have come from people who might never have $3 million in their super account.
$3 million, that's going to gobble up a whole bunch more than 0.5%.
It's just not fair that the government can just change these rules willy-nilly.
Welcome to The Fin. I'm Lisa Murray. Today, Alex Vikovic on the noisy minority opposing the super tax reforms, why they're angry and where the government goes from here. And reporter Hannah Wooten on what millennials think about the debate. It's Thursday, April 20. So, Alex, let's go back to when the government first flagged the idea that they will crack down on tax concessions for people with large super balances. I think it was at an Australian Financial Review event last November. How was it flagged and what was the response?
Yeah, that's right, Lisa. The night before our Super and Wealth Summit at the end of last year, we received a copy of the speech that Stephen Jones, the Assistant Treasurer, was planning to make the next morning.
I'm very pleased to welcome to the stage Stephen Jones, Assistant Treasurer and Minister.
We had a quick read through it and thought, oh boy, it's not going to be hard to get a debate going at this event and probably at a national level over the months to come.
There is work to be done and a conversation that is needed to be had. No area of public policy can be set and forget.
Basically, it was clear that he was setting up a fight over generous tax concessions that people get by keeping their wealth in super.
Don't get me wrong, the government celebrates success, but the concessional taxation of funds like these has a real cost to the budget. You've
got to remember that super is a very tax advantageous environment. If you've got a lot of money, other than putting it offshore in a Swiss bank account or the Bahamas or something like that, keeping it in super is probably the smartest place if you want to minimise your tax bill. And of course, most wealthy people do.
I am not evading tax in any way, shape or form.
There's the famous Kerry Packer line.
Now, of course I am minimising my tax, and if anybody in this country doesn't minimise their tax, they want their heads ring.
Now, the government knows this and preempted it to some extent. So a new Labor government needed to do something to raise revenue. And so he was floating this idea that multi-million-dollar super accounts don't pass the pub test. There are 32 people in Australia with $100 million or more in their superannuation balance.
That's a lot.
It's a lot. There's one person out there with $400 million in their super balance. So if you take the position that super is really meant to be for providing income in retirement, then those numbers are pretty egregious. Like even if you live the most lavish lifestyle of a rapper or an elite sports athlete, it's pretty hard to call $400 million an income. So he floated it at this event probably to get a sense of how ferocious the opposition was going to be. You know, this is an event that had all of the CEOs of the biggest pension funds in the country, all of the companies and advisors and accountants that advise the 1% on their finances. What was really interesting to us is that most of them thought this idea was pretty reasonable. You know, they seemed to agree that a $100 million super account is probably not in the spirit of superannuation. And although they were coalescing more around this $5 million mark as being the point at which maybe things start to get a bit smelly. The Christmas holidays went by. We knew that they wanted to do something before the budget. And then finally, the announcement came in late February.
This proposal does not change the fundamentals of our superannuation system.
The government would double the tax rate paid on earnings in super accounts with more than $3 million, from 15% to 30%.
99.5% of people with superannuation are unaffected by this reform.
They said it was only going to affect 0.5% of the population and would save the budget around $2 billion a year once it takes effect in 2025. So we obviously knew it was coming, and so did the superannuation industry. But maybe what no one really expected was the vocal backlash, not from rich listers, but from regular punters. You know, I spoke to colleagues who were working in talkback radio when this announcement dropped, and they said the lines were just running hot.
So let's talk about that backlash, and it came from a number of groups of people. So let's start with those that would be directly affected. Who are those people and what were they saying?
So obviously people that have $3 million or more in their super accounts will have something to say about it. And there are a few people in regular super funds that have vast amounts of money, but the overwhelming majority of people for whom this affects have what are called self-managed super funds, where they can really have a lot more flexibility about what they invest in. So often we're talking about people who are not really billionaires necessarily, but people like suburban doctors and lawyers and professionals, even farmers or small business owners. And because it's a self-managed fund, it means some people will have their business premises or an investment property or a farm actually sitting within the fund. And so there are some challenges with that, in particular, because the government decided to include what are called unrealised gains in the equation for how much tax you need to pay. Now, what that means is if you have a large, lumpy asset like a farm or a shop, normally for tax purposes, you'd need to sell that asset and actually make a gain on it in order to pay capital gains tax. So that's the way it would normally work. But in this case, if this policy becomes law, you'll get a tax bill that includes that asset, even if there hasn't been any kind of transaction. So that could cause a cash flow problem. You could be forced to sell shares. You could be forced to pull money from elsewhere in order to pay that tax bill because you never actually made a gain on that asset. Now, at the end of the day, these people are still statistically in the 0.5%, right? So many people out there might have limited sympathy for them. And, you know, they're generally advised by experts, so they can probably find a workaround. But the real noisy opposition was from people who don't have anywhere near $3 million and probably never will.
The policy announcement, we should say, did have broad support. News poll numbers from March showed that 2/3 of voters support the changes. But what was really interesting here was that there was a vocal minority speaking out against the reform. Why were they so angry?
I think there are a few different cohorts within this kind of noisy opposition. Clearly, some of these people were just partisan, dyed-in-the-wool coalition voters. You know, they don't like the idea of the government clawing more tax revenue from anybody, regardless of who they are, and they don't trust Labor on tax or on super. You have to remember that compulsory super is a really contested and ideological policy area. You know, for Labor, it's a landmark achievement. You know, the Labor Party and really the union movement fought for it for decades.
Honourable Prime Minister. Mr Speaker, this House last night passed the superannuation guarantee levy. In doing so, it has entrenched in legislation a great reform which will be of great benefit to coming generations of Australians.
And in 1992, the Labor government introduced the superannuation guarantee with a mandatory 3% contribution rate and a plan to get beyond that to 5%, 10% and upward from there.
Mr Speaker, for the first time in our history, well in advance of reform in other advanced industrial countries, ordinary Australians will be able to build a decent nest egg for their retirement as a result of the policies of the Labor movement.
For them, this was this holy grail that would mean some of the benefits in the stock market and in the broader economy would flow to regular workers and not only to people who know how to invest and know how to participate in the economy. And for Conservatives, maybe they don't really believe in it in principle, that the government should force you to put away your own money for your own retirement, but they know that it has broad support in the public. And so they don't oppose the system anymore, but they do want to bake in some benefits for their core constituencies, such as generous tax breaks. The second thing is that it was clearly a broken promise. And it was probably the first big broken promise of the Albanese government. So, the Prime Minister, when he was opposition leader, had said no changes to super taxes. Now, technically, he had added the caveat, not in our first term, which is why they've taken this unusual step of pushing it out to 2025 until it takes effect after the next election. The other big thing, Lisa, is that regardless of people's ideology or allegiances, a lot of Australians are wary of politicians on both sides tinkering with super. This is a really unique system in the world. There's 3.3 trillion in assets. Put that in context, it's pretty much twice the size of the Australian economy. And there's a bad track record of both Liberal and Labor governments using it as a cash cow or trying to fiddle with the settings to turn it to their advantage somewhat politically. And so, people were worried, and a lot of commentary was fueling this, both in our paper and elsewhere, that this could really be a Trojan horse to other scarier things, such as removing more of the tax breaks in super, ending the tax-free environment that you get in what's known as pension phase, or charging capital gains tax on the sale of the family home, which has been a bit of a sacred cow in Australian politics for a long time, or even perhaps more controversially, looking at negative gearing. So I think for some people there's a bit of PTSD based on the debates and the political fights of the past, and I don't think that's entirely unreasonable, given there has been 30 years of changes and tinkering, and that can make it really hard for regular people to simply plan for their retirement.
What about those people who might never have $3 million in their super? And there are a lot of them. I think the average super balance is $150,000. But they might think that one day they will have enough money and they will be affected by these super changes. What were they saying?
Yeah, I think that's right, Lisa. It's really hard to quantify how many people that might be. But I do think there is an aspirational element when you're talking about things like wealth creation and superannuation, where people might not have anywhere near that now, but they might dream about becoming wealthy. They might dream about fulfilling their financial goals, especially younger people that still have decades ahead of them in the workforce. And we know from the past that messing with people's dreams and aspirations can be a very risky political strategy. There was also the very real concern that the policy was actually going to capture many more people than the government was suggesting. Pressure was really mounting on the Treasurer's office in the days after the announcement. We and others were demanding to see the details of this, and eventually they rushed out a fact sheet with the actual methodology and the equation behind the policy. We had a read, we put it to some experts, and the verdict that came back was pretty incredible. It might affect just 0.5% of the population now, but over the next 30 years, that'll blow out to about 10% of all Australians.
More from Alex Vikovich after the break.
Madam President. My question is to the Minister representing the Treasurer, Senator Gallagher. Will an increasing number of Australians be subjected to Labor's new doubling of the super tax due to the government's refusal to index its new threshold?
Minister. Thank you, President. In 30 years, Treasury projects that roughly only the top 10% of earners will retire with superannuation balances of around $3 million or more. In 30 years, In 30 years...
So, Alex, as you just explained, well, right now this only affects 0.5% of the population, or 80,000 people. In 30 years, 10% of people retiring will have a super balance above $3 million, so they could be impacted by these changes. Explain how that will happen and why it's changed the debate.
So in the kind of terms and conditions of this policy, the government has taken the decision not to automatically index it to account for inflation. And this is where most of the criticism, and perhaps the fairest criticism of their approach has been. So what that means is the cap remains at $3 million, even though as wages rise, it will be easier for people to meet that threshold. Because obviously $3 million in the future is not the same as $3 million today. In fact, the Grattan Institute, which is probably one of the more bipartisan think tanks in this space, projects that anyone who earns over $140,000 for most of their career will end up retiring with around $3 million or more in 35 years' time. So these aren't the wealthiest of the wealthy. These are upper middle class people, professionals, people who have decent jobs today and plan to keep them.
So, Alex, should the government have been more open about that from the very beginning, the fact that this might end up affecting more people than it was suggesting at the time? Was there a communication failure here?
Look, this is the bit that people hate about politics, and I do think it was maybe a little bit sneaky for them to repeatedly talk about this 0.5%, which makes you think about Scrooge McDuck diving into a pot of gold, when they knew and they set the terms that it would actually affect 10% of people, which is millions of people. It's not a handful of rich listers. And when this was put to the Treasurer, Jim Chalmers, he tried to blame the nerds in the Treasury Department and said, well, we put it to them and this is the best calculation they could come up with in order for us to raise the amount of money that we want to raise. So it was a little bit unusual in that sense. On the flip side, the government pointed out that they didn't introduce a hard cap. You can still have $100 million in a super account after this policy takes effect, but you're not paying 15% anymore. You're still paying what the government would say is a fairly generous rate of 30%. And so, Lisa, this is part of a much bigger debate about what the purpose of superannuation actually is. The government has a plan to legislate that purpose in a way that allows them to pursue this policy and also deploy the $3.3 trillion in savings for nation building and for other outcomes that it thinks are in the public interest. But people feel very strongly about this, and it's been quite controversial, so it's very much still a live debate.
Alex, this plan to legislate a purpose for super, which is playing out at the same time as the super tax reform, is a really interesting one. I spoke to Hannah Wooten, who has been reporting on this for the paper.
Yep. 5, 4, 3, 2, 1.
Hannah, can you hear me?
Yep, got you, Lisa.
Great, thanks so much for coming in today.
Thanks for having me.
There's been a lot of back and forth on how the government should handle this and what the purpose of super should be. Where's the proposal up to and how are people responding to the plan?
So there's 2 proposed changes on the table. First, there's the purpose of the superannuation system. So Labor's trying to legislate a definition here to sort of guide any future superannuation reforms. They want to rule that superannuation should be used to deliver income for a dignified retirement. This essentially means don't use it as a tax break, don't use it for estate planning, just use it for retirement. They say it should be used to preserve savings. The idea of this is sort of slamming the door on early access schemes where you can access your mandatory contributions, for example, to build up a house deposit. And then they say all of this should be done in an equitable and sustainable way. This is a sticking point because super funds also have a legal duty that trumps anything else they do to act in members' best financial interests. For Chalmers, he says that there's areas of national concern that super funds should use some of their $3.4 trillion to sort of help move along a bit. So this is affordable housing, this is the energy transition, there's a few other ones on the table for in the future. He says that these can offer great returns and it won't contradict this duty. How this actually sort of plays out in legislation is still a bit unclear. But consultation only just closed for this purpose, and we don't expect to see any legislation until the second half of the year. Then there's this second proposed reform. That's the 30% tax on earnings in high balance accounts. So consultation only closed for this on Monday, and Labor doesn't plan to have any change actually kicking force until after the next election. So there's no rush to legislate it. But there's a budget in May. It's going to be a tough budget, and the government will want the financial side pretty buttoned down so that they can factor that into the spending and revenue forecast that they hand down at that point.
So, Hannah, specifically on the super tax reform, Alex has talked about some millennials and younger account holders who are following this debate, and they're concerned that one day their super balances will be big enough to be affected by the change. But has it also served to highlight wealth inequality in Australia by outing these very large super balances?
Yeah, so I've talked to people from millennials through to Gen Zers and whatever's below that age. There's been two striking features to those conversations. First, they've actually engaged in it. So when Chalmers revealed that one self-managed fund had $540 million in it, my sister, who usually just tolerates my superannuation chat, actually texted me saying who the hell had that much. And it wasn't just her. Friends got in touch. Colleagues asked. So this has highlighted just how much money some older retirees or soon-to-be retirees have and how little millennials and younger people have in comparison. So the second striking feature has been their response. Lisa, younger people are overwhelmingly supportive of this tax increase. They're not worried this is the thin end of the wedge for more tax reform. They actually hope that it might be. These younger generations feel like they've been footing the bill for tax breaks that help older people store up their money, whether it's negative gearing, whether it's not paying any capital gains tax on the family home. Younger people are footing the bill to help older people keep their wealth. And with all the doom and gloom, predictions about recessions, it's just going to keep happening for decades. So this plays out in the polling as well. A news poll found that nearly 2/3 of Australians support doubling the tax on earnings in high balance accounts, and more than half of the coalition's voters do. An Essential poll found that only 19% of people actually oppose it. So Lisa, there's going to be some millennials who don't support it, but these numbers suggest that there won't be enough of them to worry Labor.
Thanks, Hannah.
Thanks, Lisa. Good to talk.
Alex, what do you think about the idea that these reforms have focused attention on super not for those who have a lot, but also for those who have very little?
So clearly it has touched a nerve among the broader public. In fact, I was speaking to a political pollster the other day who said right now, when you mention the word superannuation in focus groups, people think of super taxes. So that does show you that this whole issue is really cutting through. You could frame this as a debate about wealth inequality. I think that would be fair. But you also need to consider the history here. Australia's system of compulsory super is pretty much unique in the world. You know, very few other countries force workers to effectively preserve part of their own wages for their retirement down the track. And many people, including many people overseas who are envious of our system, would say that it's good public policy. But it is very paternalistic, and it is a big deal that we force our workers to do that. And so that's why these trade-offs were baked into the system when compulsory super was introduced 30 years ago. So these tax breaks, they were part of the original deal that was struck between business and the unions, which allowed super to be born. And one of the really interesting bits that has gone underreported over the last couple of months, perhaps, is that Paul Keating and Bill Kelty, former Labor Prime Minister, former boss of the trade union movement, probably the two people who can claim to be the real architects of the compulsory super system. They warned last year that the government should not do this. They were clear that, yes, there are a few accounts over $100 million, and that probably doesn't pass the pub test. But they knew that this is all part of the trade-off, all part of the deal that they struck. And so for them, the big picture is protecting super, making sure that workers get that 10.5% a year, going to 12% and perhaps even 15% in the future. For them, that's the most important thing that needs to be protected by a Labor government, and the issue of tax breaks for the wealthy is a side issue.
It's something you just have to wear.
Yeah, effectively.
So what happens from here, Alex? Australia might have had half a dozen prime ministers by the time this cap will affect 10% of the population. Will it still be in place by then? Will there have been other reforms? As you say, this might just be the start. Will there have been other reforms brought in to rein in what the government has said are unsustainable tax breaks?
Well, the coalition opposition now has said they will vote against it, and if they were to take office anytime soon, they would repeal it. So we can assume that that's their position. Even if that wasn't the case, it does seem likely, looking at the history of policy formulation, that a future government might bring in that indexing as we get closer to that 30-year sort of deadline and as more and more voters are becoming captured by this thing. That's certainly possible. But as time goes on, those people start to look like real people to the government. They start to look like real voters, and statistically, some of them are going to live in marginal seats. So at some point, there's a political reckoning on the maths that they've chosen. But at the end of the day, governments of both stripes are going to want to raise revenue for the things that they have promised, for the things that they want to do. And generous tax concessions in super is a big one that's always going to be on the table. We need money for these submarines that we've done a deal with the UK and the US on, the National Disability Insurance Scheme, which has blown out and which needs to be brought into a sustainable footing, and the funding needs to come from somewhere. But more broadly, I think super remains a contested issue. It's projected to have $9 trillion in assets by 2040. It really is a beast. There are very few, if any, industries that have a mandated growth rate of 10.5% a year. And so I think as long as that remains the case, governments of both sides of politics will continue to tinker with the settings, and that's going to continue to trigger people, and perhaps the super wars go on forever.
That really is an extraordinary figure, $9 trillion in super by 2040. It's not surprising that it's something we're all closely watching. Thanks for taking the time to explain it to us.
Thanks, Lisa.
Here's the other big stories we're covering this week. Fox News agreed to pay $1.2 billion to Dominion Voting Systems to settle a defamation lawsuit in which it was accused of broadcasting false claims of vote rigging in the 2020 US election. The last-minute settlement came just hours after a jury was selected in Delaware. It averts a high-profile trial that would have seen Rupert Murdoch and Fox News stars take the stand. Another election technology company, Smartmatic, is also suing Fox over its election coverage. And Star Entertainment has put its flagship Sydney casino up for review and will cut 500 jobs, cancel executive bonuses this financial year, and freeze salaries. The company, which also downgraded its earnings, appointed investment bank Barrenjoey to lead the review. The announcement follows damaging inquiries in New South Wales and Queensland that found Star unfit for holding its casino licences. And it comes as the New South Wales government said it will conduct an urgent review of proposed casino tax increases. Thank you for listening to The Fin. I'm Lisa Murray with Alex Vikovich and Hannah Wooten reporting today. The Fin is produced by Alex Gow and Lap Fan. Fiona Buffini is the executive producer. Our theme is by Alex Gow. If you like the show and want to hear more, follow us wherever you get your podcasts and consider rating and reviewing us as it helps others find us. For more stories about markets, business and power, subscribe to The Financial Review at afr.com/subscribe. See you next week.
The Australian Financial Review.